But anyway, Elisabeth Holmes' sentencing is up soon, so it'll be really interesting to see. Do any of you guys have a guess? Maybe the four speakers up here, Default, 𝐺𝐤 and Rahul. We can do a little poll right now. Winner gets Bitcoin. What do you say?
I'm down for that. Rahul, are you in?
Sure.
No, I'm out.
She had every big shot on there. You had U.S. Army generals. You had Walgreens installed, I think, that machine in half of the stores in the U.S.
But one thing was missing. Not one investor was a skilled biopharmaceutical technical investor. So that was the red flag, right? Not one of those investors were like Deerfield or OrbiMed or Perceptive or somebody that really knew biopharma. So anyway, real quick, just make a guess, Ethereum or Bitcoin or not. But I'm guessing she gets, well, I'll go last. So I have my number though. Just take a guess. We're just having fun. It's not
I would say she gets 10 years and Sunny gets 15 years.
2 years.
I think 5 to 10 years seems reasonable.
No. I think 10. And the Sunny guy, I think she will blame him.
Yeah.
Because, the COO, the Sunny guy. That's him, right? That's his name, right?
Yep.
Sunny?
I have a little bit of variant perception here. I think she gets 5, maybe 7 or 10. And I think Sunny gets like 30 or 35.
If I knew her point system, I could get pretty close to it, but I would say 5 to 10 for sure.
Yeah, I think 5 to 10.
Both of their guidelines are life.
I mean, a couple big investors lost a lot of money on that deal, so
it also depends on the judge.
They were private investors, right? They tend to care.
Yeah, no, I'm just saying, but like, they could push the needle.
But to be honest, if I lost money and I was big, I would not want to be involved with that in any way or form.
The three biggest losers were the DeVos family, like Betsy DeVos. She was a former education secretary. You guys remember her?
Billionaires, yeah.
Yeah, her family lost $100 million. The Murdoch family lost $125 million.
Billionaires.
Walton family lost $150 million. Yeah. I'm not saying that hurts their pocket.
She had small investors too, I think, who like pooled their money to invest. So
I do trading. Okay, I'm a software engineer, but I do trading. I was wondering, who is the best trader that you've known personally, and how much money were they making as a day trader?
Oh boy, there's a lot. There's plenty of great traders in Wall Street, right? I mean, that's what Wall Street does, right? It's a competition to find the best traders. So there's people I know who've made almost 100% a year. So that's what Wall Street looks for, and some of that's luck, obviously, right? But a lot of it's talent too. There's a great book if you want to read, and I recommend all his books, but it's called the New Market Wizards by Jack Schwager. He's already written a bunch of books, including The Market Wizards, the first book, and a couple others, Market Wizards books. The whole series is really, really good. And I would read that, especially the New Market Wizards, I'm sorry, it's called Unknown Market Wizards. It's got a yellow cover. I read it in prison. I really enjoyed it. And it was just covered not the big traders we all know about, but like just random dudes who one guy is a bellhop actually at a hotel, and he's in Poland, and he has one of the best trading track records ever. And it's really funny because it might be Czech Republic, but it's one of these Eastern European countries, and he basically just doubles his account every year and just lives off of that, as well as the income he makes off as being a bellhop, and literally like carrying bags in a hotel. And every year he spends the amount of profits he makes. So he starts back at like 50 grand every year. So it's a really, really funny kind of thing. Cause like, I want to find this guy and give him a real amount of money, but there's other traders that have taken, $1 million to 100 million, things like that. There's plenty of stories like that. And so in hedge funds, there are a lot of traders like that. Again, they do less well once the amount of money gets significant. Once you get to several hundred million, that's kind of usually around 200 or 300 million. It's kind of hard to swashbuckle in the markets too well. And then after $1 billion, it's really, really hard. But anyone who's a really good trader typically doesn't need other people's money. They can compound really fast themselves. So in any event, I think one of the things I wanted to add is, no, I think that's it. I mean, I think the quantitative investors kind of have the ball right now. You can probably write an algorithm and make 50 to 100% in the market. Fairly easy if you're good at that space. Renaissance Technologies is still doing that, and they have 15-20 billion in the Medallion Fund. So if they can do it, I think you can probably do it too. But it's again, they have sort of some secret sauce as well. So I don't know
The
if that
thing
helps.
is, quant trading seems too good to be true. I'm like waiting for the market to take some. I lose really badly, but it seems too good to be true.
It's difficult. You have to be an expert in computer science and economics and all kinds of things like mathematics, microstructure of markets. It's really not like some simple thing, right? I mean, leverage, you have to really master a lot of areas to do it really well. But I think you'd be surprised at how algorithmic trading, like, it's not too hard to get a start. It's just, again, very, very complex. Once you can get through some of the initial complexity, I think it's actually easier than it looks. One thing I wanted to add that was really interesting is I showed the new market or unknown market wizards book to one of my friends who I think is one of the best traders I ever met. And I said, read this book. What do you think? And he said, Martin, I don't want to read a book like that because if I read it, I already know everything in there. And I said, it's funny because I think the same way, and I am a pretty good trader myself, and or at least investor. I've earned some pretty high returns over the years. And I said, the reason I read a book like this is because any one page, if there's just one thing I didn't know that adds to my game and gives me a couple percent a year more, then it's worth its weight in gold. It's a $20 book, right? Like, if I can add 0.1% return to my returns, I'm happy. It's a good investment. It's a good use of my time. And he said, it's funny you say that because I just saw an interview with Denzel Washington, who has already made, 30 or 40 great movies, and he still takes acting lessons. And I said, what's the relevance? And I knew where he was going with it. But he said, if Denzel at 50 is still taking acting lessons, and he said, somebody said, why do you do that, Denzel? And he said, if I could add even one little thing to my game to become a better actor, I want to do it, and it's worth my time. So really good thought process there, I think, in terms of trying to improve skill as a trader. The problem with trading, though, is that if you can poison your skill too. Like people who have a really good trading process, learning too much away from that process can hurt you. So you got to be a little bit careful about how you do that. So anyway, let's go to analytic.
Thank you, man. Thank you.
Hey, good evening, Enrique. So you mentioned a little earlier you've started multiple companies and served as CEO multiple times. I know you've touched on some, but could you share some of the biggest mistakes you've made as CEO and perhaps any lessons stemming from those mistakes that would be beneficial to others in the same position?
Yeah, I have a hard stop at 8:00, so that's not even enough time to go through like even 1/1000th of my mistakes. I make mistakes every day. I'm probably making some right now. So I think that like humility is probably maybe the biggest one. You just have to be really, really humble. And then earlier in my career, I would say you have to be a really good person to your coworkers. I learned that over time, and I've gotten good at that over time. But you really, really have to sort of not just be benevolent and like respectful to your coworkers, which even I failed at that in my first company or so. You have to like treat these people like they're your family, and you have to encourage and cultivate that. And that's really hard to do because they're not your family. But we're going to, me and my old team is going to a wedding for one of my team members in a month or so. And like, I don't know how many companies you've been to, but it's pretty rare for an entire company to attend a wedding. That's how close we were. And if you can't build a company that's that close, if you can build a company that's that close, I think you can do amazing things because, people really want to work and really want to produce and things like that. And I think at a lot of companies, you don't even want to see those people after work or think about them, let alone socialize with them. So I think that's another big mistake. And again, there's hundreds. I think, watching for enemies lurking within your company is one of the hardest ones. People will put a smile on their face and they'll still really dislike you. And it's hard to sort of tease that out. Over enough time, you can kind of see who's who, and getting rid of like the cancer in companies really fast. It's hard to do. Firing people is painful. Getting rid of people is painful, especially if you need board approval or something like that. And so like, once you spot the cancer, just like in real life, you got to cut it out ASAP. Letting that cancer linger and grow will be a big problem. And I've had plenty of big problems in my life, and I've ignored warning signs and ignored, clear indications where it's time to cut a tumor out. And those have been some of the mistakes. But again, at some point I'll write a book and you can read more about my mistakes, but there are just too many to name. Leverage, concentration. I learned that lesson the hard way a couple times. Yeah, man, a lot of mistakes. Chris?
Hey, big rolls. How are you?
Thanks.
Big rolls in the building. What's up?
Hey, I had a question. What do you think about metaverse real estate?
I don't think it's useless or worthless. I think that we still don't have enough metaverse winners to kind of like worry about like which metaverse is the place to invest real estate wise.
Okay.
Right? Like I think once that shakes out, I think we can probably make some real investments. But like to me, buying meta real estate in like Decentraland or Sandbox or like one of these things that's not really built or working, that seems a little too speculative for me. I mean, at the right price, I would buy it. You know, I do think like, right, if you think about quote unquote metaverse, like just being on your phone is a metaverse, right? Think about how crazy like somebody at Mars must think we are if they could see us right now. We're staring at this little cube or rectangle that's 6 inches or 5 inches long that's illuminated by some weird power, and for some reason we're talking to it like it's alive. That's a metaverse, you know. It's weird. We're sort of engrossed and like transported into this world. As metaverses get more realistic and more kind of like immersive, I think like the fact that we live in them is going to mean that wherever their putative location is, it's a real thing. So I do think it's going to be real. I do think that the designers of this metaverses owe it to the people to not make them like not design them for real estate value. Like the reason real estate has value in the real world, and I think this is going to change, by the way, I'm bearish on real estate, is because like in New York City, right, having proximity to Central Park is a good thing because it's cool to be near Central Park. But in the metaverse, why should there be travel time, right? Being 2 hours from New York is bad real estate usually because you're 2 hours from New York. Well, in the metaverse, why would you make my walking speed? I don't think you should make design decisions of metaverses that impair values for some people. Like if there happens to be natural value for one thing, great. Like your house is next to your store is next to something really important in the metaverse. That place might be a little more valuable, but don't make it so like I have to actually slowly walk, to another cool place in the metaverse, because then you're gonna have like meta ghettos and like meta gentrification and meta gentrification could be a real thing. Like if like Sandbox, that's the way that works, So like to me, I should be able to instantly transport wherever I want in the metaverse, and I think that's like a meta urban design, basically, right? So we have a lot of interesting questions about the metaverse that's coming up, and like
how would you go about actually valuing and modeling like a metaverse real estate? Because I remember watching years ago your videos about actual real estate and how there's no real way to actually value real estate. It's just kind of a buy your fools game.
Yeah, it's turtles all the way down, as they say, right? Because you can get some real estate in Montana that's just as much size as New York City, and it's there's no way to actually prove, kind of like like unlike stocks, like there's no way to QED and say this is definitely cheap, because New York State can turn at any given moment. If we keep electing people like AOC, it will turn. So I think ultimately, like it's really difficult to forecast this kind of stuff, and it's even more difficult in the metaverse. So I would be really cautious about buying any real estate in the metaverse. But if you told me I can get 1 million parcels of land in Decentraland for $50, I would throw the $50 down, but I wouldn't pay 50,000 or 50 million for it. But anyway, let's go to Glitchy because we got 15 minutes.
Okay, I have one quick question for you before you go to Glitchy.
Yes.
So when you were little, did you ever have AA batteries run out of battery?
Sure.
And then take one and then rub it in the carpet to get a little bit of charge? Did you ever do that?
No.
Why am I the only person that did that? It works. The static electricity charges the AA battery, and you can use it for another 20 to 30 minutes. If you do it for long enough.
Let's move on.
Okay, let's move on.
But
I just wanted to ask Enrique if you had done that. I just felt like I could have empathized with, somebody could have empathized with me, maybe.
Glitchy Media, a neo-reactionary.
Yes. Hey, Enrique. Thank you. I raised my hand when you were talking earlier about things that can be done to kind of reform our prison system. And, I think I've spent a little bit of time inside. And so I've spent a lot of time thinking about this. And, most people that are in prison, they don't have anybody on the outside helping them. And the people that do have people on the outside helping them are at a huge social advantage inside because they are, they can get you stuff, right?
Totally.
Right. So, but most people are willing to spend their whole day doing tasks for you, doing stuff for you, helping you or whatever for a candy bar.
Yep.
You know, so getting a day's worth of work out of somebody for $1 is very easy and usually a situation where everybody is happy at the end of the day. And so there's room there. It's very inexpensive to motivate people on a path in prison, and it's not done or tried to be done at all. I think when we're talking about prison, I think you need to switch your mindset. You got to kind of come at this situation from the perspective that a country or a society is a machine that produces healthy adults, and that the prison is our repository for our fuck ups. And if you can come at it from that problem, then you can see all of a sudden that is a huge data set that is extremely valuable, you know. And
well, that's what I was saying. I was saying that the causation is the problem, right? It's too late to intervene.
And we're not doing anything to, you know, we're wanting to stop gun violence, but we're not wanting to dissect people that have committed gun violence. We capture them and then we ignore them. And getting people, you know, it can be as simple and, you know, of just moving people around. Don't let people choose their own beds. Move people around based on data and based on progress. So you could be constantly improving situations and constantly de-escalating violence inside the system and motivating people. You know, and I'm an advocate for giving these inmates smartphones. And you know, they could be child-proof. They could only have 2 apps on them. You know, a learning app and the one that's checking in with your.
They're starting to do that a little bit.
And you know, if you're checking in with somebody, it doesn't have, you know, the highest guards is an extreme, like the guards in prison. That's where all the money's going.
Yep.
All right. It's a big box store. And it's just got a ton of guards to deal with the problems. If there's more problems, there's more guards. And that's it. That's as far as the thinking
Okay,
goes.
I just want to make sure that, you know, I understand where you're coming from, but is there a question or a point coming in?
Well, no. There was a moment earlier in the conversation where we were discussing, since you had been to prison.
Yeah, let's try to keep it to questions.
Yeah, what's up? Slather, hell, what's up?
If you were in the position of the federal government, or maybe more specifically the Federal Reserve at this point, how would you deal with the current inflationary forces we're dealing with and the kind of lack of tools, inflation or stimulus tools that we might typically have more available to us?
Raise rates 100 basis points?
Yeah, they probably should have been hiking in the back end of last year, maybe doing some intermediate hikes earlier this year when oil prices start to get out of hand from the Russia-Ukraine debacle. But I think a lot of the inflationary forces right now are just kind of fully out of the Fed's control, and they're just trying to buy themselves some time here. But, you know, we'll see how it all goes. You know, the Fed tends to overshoot in both directions, so.
Yeah, but in 2000, Greenspan did preemptive hikes, right? And that was people don't want to mess up the stock market. And I think that's the biggest fallacy, you know, that like Janet Yellen and others, Jerome Powell, have a problem with. Like when the market's going up a lot, like that's a great time to unwind all this stupid stimulus and all this free money that you did. Like what are you waiting for? Just go back to central tendency. Like why not raise, you know? And we didn't do that. And because of COVID, and we just basically gave a co-vacation to the whole country, basically. The fact that unemployment didn't really go down because of COVID is really like, I mean, how quickly did the economy recover? And like, it basically wasn't even, it was almost like a catalyst for some people. Like it was crazy. So, you know, I think the Fed has to be less political. Like, I think they were afraid of Biden as well, which, you know, is really kind of tragic. You know, I think the Fed has to be willing to look past the president too. I've tried to shut down a bunch of biotechs that were trading below cash, and sometimes it works out because of like option value. Like occasionally one of these companies does have a real drug, and that gives you like a 10x. But the problem is if you go to any of these companies and you try to tell their board of directors that they're no longer going to get board fees, they don't like to hear that. They want board fees. They want their perks. They want their free salaries. I mean, to get $50,000 or $100,000 just for doing nothing.
Burning capital. And to be frank, most of them will produce zero shareholder value in the lifespan. So
That's
why
right.
not buy them out, strip them apart, and take the cash out?
Well, I've offered to do that for a lot of these companies, and they say no. And because, again, they not only get the board salary and so forth, but the CEO, the CFO, the law firm is getting a couple $1 million every year. The accountants are getting a couple $1 million a year. So that's their safety net is, if they keep paying that money, that law firm is going to help find them another job. That the accounting firm is going to help them find another job. They're going to serve as references. There's a big safety net of like using those resources, the company resources. So you have a $200 or $300 million company going to waste because of 10 people that want to preserve $500,000 to $1 million of value for them. And it's a real agent management problem, right? Where you have a real like staggered boards, Delaware laws. There's a bunch of stuff that kind of gets in the way here. And I think, it's unfortunate, but, there's also opportunities in there. And, shareholders just have to be aware that if you buy stock that's trading at -50 market cap, that company will waste $50 million before you can even blink, right? They'll give themselves severances. They'll give themselves whatever they need to do to make sure that if they do have to leave,
that capital,
right?
The golden parachute, quote unquote, for the CEO, like he would want that for sure.
Yeah, and even the tiniest little company will spend $2 or $3 million, shutting itself down and giving themselves money before you get it.
Yeah, but just sad to see there's so much opportunity in this sector. But the capital would just get wasted for the next 4 or 5 years. And they could just go bankrupt to get bought out for 1/10 the price or 1/50 the price in the future. So, like, there should be an easier way to maybe just buy them out, right? Just strip them apart, fire whoever you want, take the cash out.
Yeah, maybe Wall Street Bets should do it. Any last questions? I got to run soon.
Mr. Enrique, I have a question. So you've been in the crypto game for many, many years now. What is your take on earn programs that different like crypto.com DeFi wallet? Like, what's your take on that?
So I've been in the crypto game for 2 weeks, just so you know. I was in prison for a long time. But do you have an opinion, Default? I'm not even sure what he's asking.
Did you say crypto.com decentralized wallet? Because I'm not really sure they're decentralized whatsoever.
Yeah, I think we should let
Let's move on.
ask.
I had one last question, man. So, out of all your experiences you've had so far, you have been a leader at many different organizations, and what I kind of want to know is what are some leadership principles that you leave your kind of lieutenants with?
Yeah, I wish I was a better leader. I guess the most important thing I would say is hiring. Like, hiring is the hardest thing in the world because as a leader, like, your temptation is it's very egotistical. It's a great feeling to hire somebody because you think that not only you're helping them, right? You're deploying capital, you're bringing somebody into your company that you think is going to be an asset, this and that, but you can be really naive when hiring. And that's probably the biggest problem is that, when you hire somebody, it's really an asset and a liability. Like, you have to really be sure that this person's an asset because the wrong hire can transform your company from a happy, productive place to a landscape of hell. And you can really find people that just are endemic and cancerous, and being really sure that you have the right people is probably the most important leadership role, because when you hire a person, the first 10 people, they're going to be the people that hire the next 100 people, or something to that effect. And I know Bill Gates and Paul Allen interviewed the first 150 people at Microsoft, and same thing with Sergey and Larry. You have to be really, really selective and really careful about hiring. And I think the rest of the stuff kind of takes care of itself, because as a CEO, you're just one person and you can't do very much. The company is going to be 20 or 30 solid people, even 5 people that are really going to move it forward. The power of one man, one woman, one person is just limited. And, you have to really make sure you pick the right people with a good attitude, no jerks. If they're a jerk, better be a good reason why you're hiring them. They have to be like walking on water. They have to be productive. They have to set a good example for everyone else, ethically, morally. That's the other thing I would say is, for leadership, never, ever, ever compromise on ethics. And that's something that, I've done in the past. And it's it bites you back 100-fold. And Buffett said, if you're ashamed of doing something, that if they're doing something, think about, and you're questioning whether or not to do it, think about it as being in the headline of the paper tomorrow. Is that something you're willing to live through? And I think, I'm not specifically talking about 𝗉𝗢𝗻, by the way. But, there's a lot of things like that, never ever compromise on something like your reputation or ethics or morals in the pursuit of profits. There'll always be opportunities for profits. So lots of lessons. Maybe I'll write a book about them since everyone's curious. But, again, nobody's the perfect manager. I think, and I was very, very far from it. But I think sometimes you can eke out a little bit of success in spite of your problems. And the goal is to keep learning and keep progressing. And, in my next companies, I have a lot of lessons that I'll plan to apply. And, I appreciated the question. So I think that's it.